Hi, everybody, and welcome to the first WSBA accounting podcast of 2019. There's a lot of very exciting things happening in the year, so we're going to be speaking with you regularly. We're here today because as this prolonged crypto winter has continued, the rose-colored glasses that a lot of outside observers use to view the space have been shattered. And there are legitimate questions about the future of this industry. However, now is also the time for the experts, practitioners, and enthusiasts to really put their heads down and get busy laying the groundwork for what we all hope and expect to be a more gradual yet sustainable recovery in the space. Part of that important work is being done, and specifically within the accounting industry. And I'm very pleased today to be joined by Dr. Stein, a member of the WSBA Advisory Board and an assistant professor at Lehman College, who is a known thought leader in the space. Sean is a regular contributor to this podcast, and for those of you who are interested, he and I did a very interesting 2018 wrap-up, 2019 look-ahead session last December that we're also going to include when we send out this link to all of you. Sean will be joining me on a consistent basis throughout the year to talk about important developments in the crypto, blockchain, and accounting space. And he's here today to speak to some exciting developments taking place in Wyoming. Mm-hmm. For those of you who may not be familiar, being led by industry veteran Caitlin Long, Wyoming has been extremely active from a legislative perspective with the goal of transforming the state into the leading domicile for companies in the industry throughout the country. Their efforts focus on everything from providing careful definitions and taxonomies of crypto assets to creating a path for companies to issue tokenized shares on a blockchain. And with that, I'd like to bring in Sean to discuss what he's seeing recently out of the state and the associated implications for accounting professionals. So welcome, Sean.
How you doing, Steve? Happy to be back. No, so as you had actually mentioned, right, in our 2018 sort of wrap up and 2019 look forward, one of the key topics that we had talked about was the idea that sort of now going forward, some of these regulators and oversight bodies were actually being pretty proactive and forward-looking in terms of, as you said, sort of laying that foundation and that groundwork to sort of get these crypto assets out of sort of the fringe and more into the mainstream. And so during, I guess, the month of January, right, there was a lot of activity going on in Wyoming. And then right towards the end of the month, there was a bill that was actually approved, right, to now go forward, right, for formal approval in their house and then actually to be signed into law at the governor level. But basically this group, the Blockchain Task Force, has nearly a dozen acts that have either been approved in 2018 and or are under consideration to be approved in 2019. But actually the bill that sort of sparked all of the headlines towards the end of January was a bill SF0125. And if anybody is interested in reading the actual bill itself, it's online. But basically some of the key points in here that I'm most interested in from obviously a blockchain point of view, but really from a crypto blockchain accounting point of view, is the fact that really it is the first law or bill that actually goes through and actually clarifies, right, different types of digital assets, right, whether it can be a digital token, as you had mentioned earlier, other types of digital assets, or the actual currencies themselves, like Bitcoin. And so an important sort of step here is that in Wyoming going forward, if everything gets approved as is that in the state, Bitcoin and other sort of cryptocurrencies are going to have the exact same treatment as cash, which from a accounting point of view is a big deal, right? Because as we all know, right now the IRS classifies these different types of cryptocurrencies as if they're property. So anytime that they're bought, sold, or traded for other goods and services, that is going to generate a income tax event. And so then this is a big step, I think, going forward from a accounting point of view. Now, sort of taking a step back, right? Also in this bill is really something that possibly could be overlooked, but I think is a possible game changer, right? Because currently under the model sort of pioneered by the BIT license in New York, basically most of the companies who are handling crypto assets have done so either as a trust company or in coordination with a trust company. The bill in Wyoming actually takes a different approach by allowing banks to actually hold crypto assets to offer those custodial services as a banking institution and to basically have those classified as assets under administration as opposed to holding them directly. Now, actually what that means, right, from a accounting point of view, is that now banks are going to be able to actually get in this game, right, directly. And as a bank, it's a lot easier for a bank to operate by default in all 50 states versus trusts, which have to go through extra legal steps to operate in different states. And if banks are able to enter this space, that is going to accelerate, as we also covered in our 2018 wrap-up, the institutional push and the flows coming into the crypto space. So I think from a accounting point of view, from the top down, those trends are going to basically result in more CPAs and accounting firms having to deal with questions linked to asset valuations, custody, and all of these different types of policy questions linked to cryptocurrencies. And then just one other point that I thought was interesting, just from a personal point of view, and that is not finalized yet, is that this or a future bill that's I believe still in committee, but don't quote me on that. There is a idea to sort of put forth a new type of financial institution, as opposed to having cryptocurrencies handled by trusts, as is currently the case usually, or in the current version of the Wyoming legislation to have it handled by banks. There is an idea or a concept to actually create a new type of financial institution, a special purpose depository bank. And so I think if that actually happens or takes off, that's going to obviously raise questions from a attestation and an audit point of view to actually figure out how CPAs and accounting firms are able to actually handle those types of institutions in terms of their SOC 1, SOC 2 audits and their financial statement audits too. But sort of the key takeaway here that I would emphasize, right, for anybody in the accounting space or who's interested in the blockchain crypto accounting space, is to really sort of always keep in mind that all of these regulators, oversight bodies, members of different houses of Congress in these different states are actually pretty forward-looking and pretty progressive in how they're sort of drafting these bills and these guidelines. So it's important for us to really, one, be aware of these changes, and two, ideally have a voice in how these bills are being crafted. So Steve, I mean, there's a lot going on.
Yeah, it certainly seems that way. Just like to backtrack a couple of steps and ask
Sure.
a few questions. For one, you said that this is a game changer in the sense that it enables accountants to treat certain types of cryptocurrencies as a form of cash. What does that specifically mean from an accounting point of view vis-a-vis property?
Sure. So currently right now, right, the IRS treats all different types of cryptocurrencies as property. And that sort of ruling is having a outsized influence on the accounting conversations, right? Because we've talked about it previously, I'm sure everyone tuning in has heard it, that really sort of there's a conversation right now as to whether or not cryptocurrencies should be treated as intangible assets. Now, while that kind of works, that's not a ideal answer, right? Because there's a question of valuation. How do you value it? And then how do you update that valuation? But really, sort of, if this bill passes, again, as is, and is sort of treated as a model for other states to adopt, it's going to be a lot easier for accountants and the individuals and companies who want to use cryptocurrencies to actually do so. Because then it's a lot easier for us to actually do the audit and the attestation work for it, because we don't have to worry about these extra questions of custody and of basis and of how that basis is being determined if these items are treated just as a cash equivalent at their current market value.
Oh, okay. Thanks for that. And another question too. I think we're all very impressed with what's happening in Wyoming and with the Wyoming Blockchain Coalition, how fast they've been able to act. And a lot of these
Absolutely.
bills, in one shape or another, I think most of us would expect to come to fruition just because there seems to be unanimity across the aisle from a bipartisan point of view within the state legislatures. That said, what does it matter if these laws are just passed in Wyoming but are not replicated across the country or perhaps internationally from an accounting perspective, or how do we take that into account?
Yeah, excellent question, Steve. Right, because business is international and accounting is also international. So probably the best way that I would answer that question is to ideally sort of the outcome that I would sort of like to see, right, out of these bills being passed, ideally as they currently are, would be to have these sort of form a model or a template for other states to follow, right? Because obviously there's a task force in NY to sort of go over the whole bit license framework and to give that an overhaul. So from a accounting point of view and from a practitioner point of view, it's a lot easier if there are, as you said, if there are equal standards in all 50 states at the very least. And hopefully that is what starts to happen. But as far as the U.S. versus international accounting, I mean, there are always going to be differences between how different assets are treated and valued under U.S. GAAP, IFRS as it's used in France, IFRS as it's used in Germany, and all other types of international markets. So I'm not so much concerned on the differences between how they're treated here in the U.S. versus under IFRS for now, because we're used to that. But hopefully, as these houses and governments in different states start to tackle these issues, hopefully they are going to start to look at the work that each other is doing to form sort of a consensus.
Great, and I'm sure that you will keep us all abreast of relevant developments, both nationally and internationally, as you'll be coming into the show quite often to give us insight into breaking news within the crypto space, but with a particular focus on accounting. So with that,
Absolutely.
Thank you, Sean, for joining us today. Thank you all for listening, and we will speak to you soon.